General Motors, GM. Last year, GM announced that it was accelerating its EV plan timeframe. It will launch 30 new EV models by 2025 and invest $7 billion in EV and autonomous technology. Within the EV industry, GM is almost like a value stock with its forward PE of 8.3, and the car is expected to sell close to 3 million vehicles in 2021 with around 100,000 being EVs. One reason for GM's recent underperformance has been supply chain issues which have constrained production to about 65% of full capacity. However, the company believes that the worst of the crisis is over, and production should return to full capacity sometime by the end of 2022. GM is rated a C by the ratings, which equates to a neutral rating. It's not surprising that GM has a B for value given its low PS and PE ratio, especially compared to other EV stocks. It also has a B for value, which is consistent with its low PS ratio of 0.7 and forward PE. Analysts are also bullish on the stock as it has a consensus price target of $74 with the highest estimate being $90. Additionally, 11 out of 13 analysts have a buy rating on the stock. Ford, F. F is making big waves in the EV industry with the Mustang Mach-E and electric F-150 garnering rave reviews and strong pre-sales. F would also be one of the biggest beneficiaries of the BBB bill being passed given its unionized workforce and production in the US. The company's last earnings report showed that it's doing well despite some of the challenges on the supply side, which is preventing its factories from running at full capacity. In Q3, Ford topped earnings and revenue expectations by a significant margin. The company also raised its guidance for the second time. It also holds a meaningful stake in Rivian, RIVM, and has benefited from its recent gains as well. F is well positioned as its legacy business is a cash cow which it's using to build its EV segment. This puts it in a better position, especially as many EV startups are dependent on funding growth through debt or issuing equity, which erodes EPS. Given its attractive valuation, including a low forward PE of 10.5, it's not surprising that Ford has a B for value. Ford also has an A for sentiment and a B for quality. These factors are reflected in Wall Street's assessment of the stock, as 11 out of 15 analysts covering it has a buy rating. For 2022, they also are forecasting earnings growth of 35% with a strong economy and increased production. TSLA is currently the market leader in EVs. Last year, 2.8 million EVs were sold. Of this, TSLA sold 700,000, and it's expecting to sell 40% more in 2022. Another milestone for Tesla in 2021 was its new production facilities in Texas, Germany, and China continuing to scale production. It's a notable accomplishment as TSLA struggled with this task for many years, even causing a 40% decline in the stock price at one point, and it's expected to be the major challenge for the slew of competitors emerging. While many argue that TSLA is overvalued given its more than $1 trillion market cap, it is the clear leader in EVs by a wide margin. Further, it has a dominant lead in autonomous driving given that its vehicles are already generating data and helping its neural network improve. Given its resources and CEO Elon Musk's past successes, they can't be counted out. Baidu. Similar to Apple, Baidu is another tech company that is looking to move into the EV industry. Baidu's primary business is internet search and online marketing solutions in China. Baidu has been using the proceeds from its search business to invest in other high-growth areas like cloud computing, AI, and autonomous vehicles, AV. While there was speculation that Baidu would license its self-driving software to other original equipment manufacturers, OEMs, Baidu instead is embarking on building its vehicles through a partnership with Geely, a Chinese multinational automotive company. The joint venture will use Baidu's autonomous driving software and design with Geely's EV modular platform. It reduces the upfront cost of production for Baidu, which has no experience in manufacturing. For Geely, it will see increased volumes, while Baidu will contribute capital for scaling production. In pilot tests, Baidu's self-driving vehicles had shown success in making trips without incidents and navigating road hazards. Investors were enthusiastic about this move by Baidu to take the next step in the commercialization of its AV technology, as shares climbed 35% in less than a month following the announcement. Since then, shares have given up all these gains and more. The primary reason is the Chinese government's crackdown on tech companies due to concerns about market power and user privacy. While this remains a risk, it also could be an opportunity to pick up shares at a discount, especially as Baidu's core business remains profitable, and it offers exposure to a variety of growth categories including EVs. NIO is one of the best performing stocks in the market and among EVs since this bull market started in March 2020. Over this period, the S&P 500 is up 116%, while NIO is up more than 1,300%. However, the stock is down by more than 50% from its highs in February 2021. There are a couple of drivers of this massive volatility. During the upswing, the company's shares were bid up as many saw it as the China of Tesla, given that both companies' products were popular due to their design and had visionary and charismatic CEOs at the helm. Therefore, many investors believe that the company will have a similar trajectory to TSLA. However, this bullish euphoria has been interrupted for most of 2021. A major factor is certainly the move higher in short-term rates, which leads to outflows in high multiple growth stocks like TSLA. Another factor is the aforementioned crackdown on Chinese businesses, which has cooled sentiment among investors and led to a re-risking of all Chinese stocks. These are salient risks that investors need to consider. However, the company is doing an exceptional job in terms of operations. It's consistently increased production and is set to unveil new models in the coming years in a variety of categories and at different price ranges. It's also likely that the Chinese government will continue to provide additional support for domestic EV companies like NIO. Thank you for watching this video. We appreciate your continued support. For more daily news, please subscribe to our channel. This is Economics Empire, and we'll see you in the next one.